Guys, very welcome to another week ahead video. Now, we've seen some very interesting moves in the Kiwi dollar over the last week due to a few factors, and we think that this week's New Zealand employment numbers can create a great trading opportunity on the Kiwi dollar. So let's jump to the video now to discuss how we can prepare for this event and possibly trade it as well. As always, guys, we'll start with our three-step analysis process. Step 1, find the baseline for the relevant currency. Step 2, the baseline for the upcoming risk event. And then step 3, finding the possible sentiment shifts that can cause a catalyst or trigger to trade. Now, looking at the baseline for the Kiwi dollar, the short-term bias for the Kiwi dollar has definitely shifted to the upside last week. This came from Westpac after they announced that they no longer expect a November rate cut from the RBNZ, but instead see the RBNZ holding off until February 2020. The reasons they gave for this change was due to an improvement in domestic data and global market sentiment. And they also noted that slowing economic growth and subdued inflation means that interest rates will need to remain low for a longer time, but they don't think there's enough evidence for a further cut at this stage. Now, after this news, the expectations for a November rate cut by the RBNZ has fallen to 57% from a high of 80%. Now, in terms of key data, the GDP did disappoint. Latest GDP data coming in with a rise of just 0.3% versus RBNZ forecast of 0.6%. However, we did have inflation surprise to the upside with a fall to just 1.5%, whilst the RBNZ was expecting a drop to 1.3%. Now, the Kiwi dollar did outperform the Australian dollar and gained good momentum last week following that RBNZ rate cut expectations as they were being pushed back. And according to ING, a factor that exacerbated the moves in the Kiwi dollar was a possible short squeeze, as the latest CFTC data did show that the Kiwi dollar was the most oversold G10 currency. Now, in the short term, it is worth noting that the overall risk tone can influence the Kiwi dollar due to its high beta status. Now, expect a strong risk on tone to support the Kiwi dollar and a strong risk off tone to pressure the Kiwi dollar. Now, we've also seen more days of positive risk tone in the last week, which further supported the Kiwi dollar with its high beta status. The main highlight for Kiwi dollar will be that jobs report, and according to Westpac, this labor report is a key data point that could either confirm that a November rate cut is off the table, or it could tip the balance back in favor of a rate cut for November. So this will be a very important upcoming event. Below, we have the expectations for this week's upcoming labor report. Unemployment rate is expected to climb to 4.1% from a prior of 3.9, with a minimum expectation of 3.9 and a maximum of 4.2. Job growth quarter over quarter is expected to fall to 0.3% from a prior of 0.8, with a minimum of 0.1 and a maximum expectation of 0.4. Now, it's important to remember that the unemployment rate had a surprising drop to an 11-year low in June. Thus, an uptick in the number should not be of a major concern for the RBNZ. Furthermore, some analysts argue that the RBNZ forecasted unemployment at 4.4% for quarter 3. Thus, it would need to see a much worse number than that to alter their course at present. Now, also, as growth has slowed throughout the year and has remained soft, the RBNZ would already expect job growth to soften alongside that as well. And how this release changes the market's expectations for the RBNZ will be crucial to determine the sustainability of any move that we might see after this release. Now, it's also important to note that the overall risk tone will influence the Kiwi dollar with its high beta status. So again, expect a strong risk on tone to support the Kiwi dollar and a strong risk off tone to pressure the Kiwi dollar. Even though we might have a miss or a beat on these numbers, the risk tone will be a very important consideration. Then, in terms of possible sentiment shifts that we can expect, the biggest dovish shift from the labor report would be an unemployment rate that comes in above the 4.2%, and a job growth to slow below the minimum expectations of 0.1%. Now, a big miss on the Kiwi dollar employment has the potential to tip the balance back in favor of a rate cut for November and might cause an unwind of the bullish moves that we've seen in the Kiwi dollar last week. So it will be very important to keep that in mind. If this does happen, it will be important to see how the release has changed the market's anticipation for that November rate cut from the RBNZ. If the release does not bring back rate cut expectations, then the reaction in the market might be more short-lived. So just do take note of those interest rate expectations following this event. Then in terms of a potential hawkish shift, the biggest hawkish sentiment shift can occur if the jobs report surprises to the upside. As the short-term sentiment on the Kiwi dollar has shifted more positive recently, it might not take a very big beat to cause a bullish sentiment shift in the Kiwi dollar this week, so just keep that in mind. The biggest shift would occur, however, if we see a beat of the unemployment rate coming in below the minimum expectation of 3.9% and a beat of the job growth coming in above the maximum expectations of 0.4%. Now, this would further push back the market's expectations of a November rate cut from the RBNZ and should create a good opportunity for us to buy the Kiwi dollar in the short term. Now, currency pairs to consider for pairing against the Kiwi dollar. In the case of a dovish sentiment shift, we could look to pair the Kiwi dollar against the Australian dollar. It has also been well supported in the last couple of weeks due to an overall positive risk tone in the market, as well as hawkish comments from the RBA, as well as that weakening of the US dollar following that FOMC meeting. Now, in the case of a hawkish sentiment shift, we could look to pair the Kiwi dollar against the euro, which remains fundamentally bearish given the state of the EU economy and the recent easing monetary policy put in place by the ECB. Now, how to actually trade this event? This event will be valid for trading phase 1 trades if we do get a clear sentiment shift. Now, if you are interested to learn how these phase 1 trades work, you can check out our news trading strategy playlist on our YouTube channel where we post weekly examples of how these type of events play out. If we do get a phase 1 move generated by a sentiment shift, then we could also look for a possible phase 2 pullback from that initial move. Now, we post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab, and you can see each day which sentiment shifts are in play and which ones are still valid for trading any phase 2 pullbacks. Now, you can also learn about how these setups work during our live analysis webinar sessions each day inside the Forex Source terminal. Guys, as always, thank you so much for watching the video. If you find the content helpful, please do us a favor by clicking the like and the share button. Subscribe if you haven't done so already. And also, if you have any questions about the fundamentals, please remember to keep them coming. Post them in the comment section below so that we can make great videos based on the questions that you guys asked us. Until the next video, guys, cheers.